All right, you guys, welcome. Doug McKay on the 2nd of December, 2011. We're going to start out looking at a weekly chart of the S&P 500. Excellent week due to Wednesday's big move. You can see we are still down below the downward sloping trend line. Although for the bulls, we are above the 30-day and 50-day moving average on a daily chart. Let's go ahead and take a look at a daily chart where this downward sloping trend line will still show up. Here's this trend line left over from the weekly chart. We are still also below the 200-day moving average, even though we're above the 30 and the 50 here. You cannot see the 200-day moving average on free stock charts, but we did trade above it today in the S&P, only to close below it. Ideally, what we would like to see to get long this market is not only to get above this downward sloping trend line, but also to build a handle off to the right here, either with a little bit of a fade and then get through these highs here. So we'd be basically, as bulls, looking for a cup and handle. But the fact that we are still below the downward sloping trend line and the 200-day moving average, we have the overall trend is still down, meaning short, which for our purposes in the managed accounts at this time is cash. Again, an excellent week. Last week was one of the worst weeks in quite some time, and this week was one of the best weeks in a number of years. So we'll see what happens next week, but we do have the overall trend is down. If we look at a chart of the SPY, again, an arrow in the quiver for the bulls would be our the fact that we're above the 50-day moving average. We're above the 30-day moving average. However, again, for the bears, we do still have some gaps to the downside. That's not to say that these have to be filled or would have to be filled prior to breaking out, but the fact that they're there and we did trade above the 200-day today and close below it gives us caution on the long side. All right. When we look at the NASDAQ 100, back in November, we talked about getting long if we got a close above 59. That close never occurred. So we're looking at a very similar pattern where we have a cup, potentially a handle, and then a breakout, which would get us long the NASDAQ 100 again above 59. All right. The Dow looks a little bit better. We are above the 200-day moving average on the Dow. If we were to draw in this downward sloping trend line, we did trade above that today. We basically closed right at it. Again, ideally, 12,250, 12,230 is a good number in order to get long, let's say, the diamonds when we're tracking the Dow. As far as gold goes, not much direction here. I just drew these trend lines in, kind of this symmetrical triangle here. Obviously, a case can be made that we're holding this trend line here. We are above the 50-day moving average, but I would probably want to wait for just a little bit more confirmation in this news-driven market at this time. So as of the close on Friday, 12/2, we have the overall trend is still down in the equity markets. That could change next week. All right, you guys, we'll see you next week. Doug McKay, antiwallstreetguy.com.